We're half an hour from the open in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Rebecca Choong-Wilkins with Annabelle Droulers.
Our top stories: President Trump formally signing proclamations on 25% steel and aluminum tariffs and warning that cars, chips, they could be next.
And there is little sign of risk appetite as investors are assessing the trade war impact. Stocks treading water while the dollar and gold strengthen.
And China Vanke getting a helping hand on its mountain of debt with $380 million in support from its biggest state shareholder. Taking a look at the market reaction this morning to what has really been a very heavy morning of news flow. But just in the last couple of hours, Donald Trump signing a series of executive orders, but putting this 25% tariff on steel, aluminum imports. Now, the goal is to bring more production onshore. But certainly, I'm going to leave the details there. Steve Engel is joining us in just a couple of minutes. But the details here in the market reaction, we have seen some contracts moving higher here, but the most pronounced move we're seeing this morning is what's happening in gold, because we've seen that hitting a fresh record high, already up more than 10% year to date. So investors, they're really just very uncertain about how this all exactly pans out. But let's take a look as well, the moves that we're seeing in the bond space this morning, because again, we're seeing these inflation expectations that are starting to build among investors here. So this chart here taking a look at the 30-year break even below the 5-year yield gauge. Now, break-evens, of course, you're taking a look at the difference between treasuries and those inflation-protected securities. Usually you would see the 30-year break-even trending higher. That's not the case right now, so there's an inversion in place, and it tells you that, again, investors, they're uncertain about what happens more in the near term. Let's also take a look at what's happening this morning in Asian equities, how all of this is translating across. We just spoke there. Essentially, you are continuing to see stocks moving higher this morning, so perhaps shrugging this off to an extent. Japan is shut. We have seen US futures, though, a little bit under pressure. And again, these volatility gauges looking a little bit inflated as well, or elevated. So let's take a look at China futures ahead of the open, of course. What we're seeing this morning, again, is that the volatility gauge for the Hang Seng, for instance, you're seeing that bit of a spike there coming through. Actually, if you were to look at it in percentage terms, it's about a 5% jump. Of course, we are continuing to see this southbound rally, something we're focusing on very much in particular. Another good day overnight for the Golden Dragon Index. And again, another vote of support for Chinese equities. Rebecca, coming from David Tepper.
Yeah, absolutely, Annabelle. And to your point about what we're watching here in Hong Kong, of course, we had that spike in volatility, but it's tech, really, that is helping to drive some of that rally that we're seeing. For the HS Tech, we're looking at this 5387 level. Now, that will take us back to the October high, which was the highest back since 2022. Of course, we entered bull territory for that index last week. We're also keeping an eye still on stock turnover. We didn't actually, manage to top that 2 trillion level that we were watching yesterday. But as to Belle's point, we're still also looking at Chinese investors pouring into this bull run in Hong Kong shares. They've added about $19 billion so far this year. Elsewhere, keeping an eye on SMIC earnings. Those are coming through. Again, the self-sufficiency China story really is what we're expecting to see. Preview there, expecting to see the past quarter growing 30, 31%, 32% or so. We have a flurry of data coming through as well. We're now entering the window for credit data, so look out for new loans, aggregate financing, and also, actually, in fact, FDI, ODI. We're also now expecting to see that. And in geopolitics, the Cook Islands Prime Minister is in China. In fact, in China through this entire week. It is the first visit for a leader of that island nation to China. It's a state visit. And the concern here really is around national security. We had New Zealand saying they were somewhat caught off the back foot. We've also had reports on the New Zealand side that we are maybe seeing a major deal between the Cook Islands and the Chinese government. Of course, that whole issue around the China-Pacific alliances very much plays when it comes into New Zealand, Australia, and some of the US allies. But sticking really, in fact, to geopolitics, Belle, turning to our top story today.
Yeah, that's right. Well, as we were saying, President Trump, he's going to be following through on that pledge to impose a 25% tariff on all steel and aluminum imports. But let's bring in our Chief North Asia correspondent, Stephen Engels. So, Steve, I mean, we're still trying to get through all the details of this over the past couple of hours, but how sweeping are the tariffs going to be?
Well, he said it was going to be pretty sweeping yesterday on Air Force One, and he's come through with that pledge that he made, 25% tariffs on all steel and aluminum imports into the United States. It doesn't matter if you're an ally, a major trading partner, whether you got an exemption the last time in version 1.0 when they slapped a similar tariff on its trading partners, but gave exemptions to key partners like Canada, Mexico, and Brazil. All were able to get certain levels of exemptions. And this time, no exemptions, except Australia. Apparently, maybe. Donald Trump, in this impromptu press conference after signing the executive orders, essentially said he had a very good conversation with Mr. Albanese of Australia and was going to consider giving an exemption. His main justification is that the United States has a trade surplus with Australia. And he was asked about, what about the UK? He goes, well, no, the UK has a trade surplus with the United States. We run a deficit. So, again, he's basing it on the trade relationship and the trade imbalances with these countries. So we still have time. There's 3 weeks to today until this tariff takes into effect. And keep in mind, the rest of this week, we're going to have to be dealing with potentially other tariffs that he's going to be signing. He's talked about cars. He, in particular, targeted European car makers. He's talked about chips. He's talked about pharmaceuticals. He's talked about the reciprocal tariff scheme, which he says it might be done in a couple of days. That's if any country slaps a tariff on U.S. exports, U.S. imports, U.S. exports to their country, he's going to reciprocate with the same, like tariff. So, buckle up.
So I want to ask about China here. I mean, It doesn't export a great deal to the U.S. Of course, it is the world's biggest exporter of steel.
Yep.
Is there any sort of, ricocheting of this policy through impact China in any way?
Well, of course, I think, China is at the center of a lot of these tariff actions. You're absolutely right. I mean, the list of top exporters of steel to the United States, China is a little bit down the table, of course. Canada is number one, Mexico, then Brazil. Taiwan is also there. But on a monthly basis in January, you saw Canada, Brazil, Mexico, South Korea, and Germany. So China is a little bit down. But the White House is essentially saying that countries like China and also Russia have kind of circumvented a lot of the duties that are in place. Keep in mind, the Biden administration put a 25% tariff on Chinese steel and aluminum in September. And the Chinese have been, according to the White House, finding ways to get their products out into the market and indirectly into the United States. Selling steel, for example, according to the White House, to Vietnam, which then finishes the steel and then re-exports it, rebadges it as Vietnamese steel into the United States. There's also the allegations that China, with its slowing economy, slowing demand for steel, has been exporting its excess lower-cost steel to places like Mexico and Canada. And then what does Canada and Mexico, according to the White House, do? They sell their higher, expensive, locally made steel into the United States. Donald Trump wants to close these loopholes.
All right, Steve, that was our Chief North Asia correspondent, Stephen Engel, on what is one of the biggest stories, of course, of the day for us. But another big one that we're tracking this morning is what's happening with OpenAI, because the CEO, Sam Altman, has rebuffed a $97 billion bid from a group of investors led by Elon Musk to buy the nonprofit that controls the ChatGPT creator. Let's get more with our Bloomberg Intelligence senior tech analyst, Mandeep Singh, joining us this morning. And Mandeep, I mean, it's almost so fantastical, the headline, this idea that Elon Musk would be part of a consortium to buy out OpenAI. How serious is that bid?
Well, we know he bought Twitter, a couple of years back. So clearly he is serious about these acquisitions, although the price tag is quite interesting because even though, $97 billion would probably be one of the largest acquisitions in tech, but when you look at OpenAI's latest funding rounds, that's more close to, $250 billion plus. In fact, with Project Stargate announcement, one of the rumors that was swirling around was that Softbank would end up taking a stake in OpenAI, and that would be at a valuation of close to $300 billion. So, look, I think it's coming at an interesting time when OpenAI wants to convert to a profit entity. Remember, it's a nonprofit company. And I think Microsoft still owns 49% of that company. So a lot of kind of complicated pieces here, but clearly, Elon Musk and Sam Altman don't get along very well. And the Project Stargate announcement sort of compounded that. And you're seeing the result in terms of Elon Musk firing back and, looking to acquire this nonprofit asset.
Mandeep, how does this affect OpenAI's partnership with Microsoft? We know that has been criticized by Musk in the past, called a monopoly, for example, by him. I mean, does this deepen or raise more concerns about that relationship between Microsoft and OpenAI?
Oh, look, Microsoft made an early investment in OpenAI, and until OpenAI declares AGI, they will continue to get almost 75% of OpenAI's profit. So I think Microsoft is somewhat safe in this whole situation because of the legal bindings and, what they own of OpenAI. But clearly, even Sam Altman had somewhat of friction with Microsoft, given his ambitions around raising money for training runs and, Project Stargate announcement. So there is some contention going on in terms of how OpenAI wants to decouple from Microsoft. But clearly, when it comes to the largest foundational model companies, OpenAI, Microsoft is one entity, and then you've got Anthropic, Meta, and Google Gemini. So these are the main foundational model players. And XAI owned by Elon Musk. So clearly, Elon Musk wants to make sure that his company remains relevant when it comes to these foundational model providers.
Bloomberg Intelligence Technology Senior Analyst there, Mandeep Singh. And still ahead, Ascentage Pharma co-founder and CEO Dajun joins us for an exclusive conversation on the company's growth outlook after its U.S. trading debut. And we are counting down to the open of trade in Shanghai, Shenzhen and Hong Kong. This is The China Show.
You're watching The China Show about 15 minutes out from the open this morning, and you're seeing futures that looking to possibly another day of gains. So it sort of does track what we're seeing for the broader Asian index this morning, ex-Japan because it's shut. But investors so far are sort of shrugging off these series of executive orders that Donald Trump signed in the past couple of hours, putting that 25% duty on imports of steel and aluminum into the country. But that said, what has been the really interesting dynamic, and we can dig more into the details now, is the rally that we're continuing to see in Asia or China tech stocks in particular. But let's get more on that now. Bring in the head of APAC Equity and Derivatives Strategy at BNP Paribas, Jason Lui, joining us this morning. And Jason, we can bring up the chart to begin, but sort of looking at what has been that southbound rally, there's a lot of conviction from mainland investors into what's happening in Hong Kong. And there's sort of two things that are going on right now. Firstly, you've got this optimism around DeepSeek, perhaps. At the same time, a lot of investors are buying up names like Alibaba, for instance, that are more insulated from the tariff risk. So what's sort of driving this the most, do you think? Conviction around the strength of Chinese innovation, or looking for those hedges against tariff risks?
Sure. I think that's a great question. We can probably divide the two parts. Maybe we'd start with the tech part first. I think when it comes to tech, certainly the success of DeepSeek brought out two things. Number one, you can develop a competent AI model at relatively low cost. And number two, Chinese tech company can be competent on a global level. And those two things are previously not really baked into the market. And so I think that's a pretty meaningful game changer in that sense. I think the second point is to your point about southbound support, because this is something we noticed last year when we had the record-breaking more than $100 billion worth of buying. And this year we're likely to continue. And specifically when it comes to southbound, we think there are four interesting characteristics we want to pay attention to. The first one is that southbound is structural. As we know, we're now 10 years into Stock Connect, and this is so far the main channel for both retail and institutional investors to deploy the capital offshore. Number two, southbound is actually counter-cyclical because we tend to observe this buy low, sell high behavior. In fact, the southbound has been relatively muted after the new year until yesterday. Why yesterday? because southbound is also sensitive to renminbi movement. If you recall, over the weekend, we had a weakening in renminbi, which prompted some urgency for southbound investors to buy some Hong Kong dollar denominated asset, which is a FX diversification in their mind. And finally, which is something new this year, is they could be seasonal. So one of the major change when it comes to capital market reform in China is that these large companies are now paying dividend at least twice a year. One started in January, another started in July. So when your onshore interest rate is so low, you now have a group of investors looking for yield. And you will buy these companies opportunistically when you know that you're eligible to pick up those yield going forward. So this year may be the first time we start to develop a little bit of that seasonal pattern as well, which makes it very interesting in terms of southbound flow in Hong Kong.
So what does it look like then, the moves from here? If there is that seasonality factor, is the rally intact, or do you see it sort of trading sideways a little bit?
Yeah, certainly we have rallied a lot, but also that we've given back a lot of that optimism started back in Q4 last year. I think the way we think about the Asian market at the moment is that we think there's actually a very interesting pair trade opportunity between the Taiwanese equity and the Chinese technology. So let's say if we look at TAIEX versus the Hang Seng Tech Index, it actually plays into two major themes. One, on this tech transition from hardware to software, because we know that the Taiwanese as an index is heavily geared towards hardware, whereas Hang Seng Technology has a lot more software component. And this is not just a Greater China theme. We see that happening in the U.S. as well. And so this is a manifestation in Asia. The second part is tariff, and I think your colleague Stephen actually brought up a very interesting chart. When we look at that steel tariff, Taiwan actually ranked number 5 in terms of being one of the origin of sources shipping to the U.S. And we know that President Trump is also thinking about chip tariff. So you could potentially see more headwind, at least in the near term, when people look at Taiwan market from a tariff perspective as well. Whereas on the China side, it seems that this time around, there's a little bit of a playbook where the Chinese policymakers are trying to follow through step by step. So I think the Taiwanese equity versus Hang Seng Technology is a very interesting pair trade in our mind.
We've spent this entire time talking about AI, tariffs, chips, headwinds, but typically this time of year, we would be really thinking about the MPC and what we're expecting from the MPC. So, I want to ask, does the MPC... why does it matter? What do we need to see from the MPC? And we had this interesting conversation where a colleague of mine said the most helpful thing they can do is not talk about tech. I want to get your view on that.
That's a great question, because I think if we rewind the clock maybe just a couple of weeks ago, I think there was a lot of optimism on what MPC would do, knowing that the U.S. is now introducing tariff. I think what happened is that DeepSeek kind of bought us some time. Number one, it causes people to rethink about Chinese tech valuation, and it also gives time for the policymakers to rethink about some of the potential measures as well. I think from our side, we've been thinking that the MPC will be more targeted. We still don't think that the Chinese policymakers will simply just throw a lot of money at the problem, because a lot of those issues are structural, and it's not something that can be solved this year. And so in that sense, I think perhaps they can leverage that development in AI and trying to channel fund flows into areas that require a lot more support than before. So perhaps this AI development may allow policymakers to be even more targeted when it comes to the support measure for the economy.
I mean, to your point previously about some of the southbound support that we've seen, what does it take to get foreign investors, big foreign institutional investors, back into this market?
Yeah. This is something we've seen last year as well. If you recall, I think there were a lot of hesitation to jump back into Chinese equity. But when we saw the market rally 20-30% within 1 week, it does indeed attract global capital. And so if you look at the U.S.-listed China ETF, I think over the past 1 or 2 weeks, they have attracted quite substantial amount of capital. And I think there were some news reports suggesting that some of the major U.S. investors are also starting to reallocate more into China. So I think in my mind, the foreign appetite is always a function of market performance. So if Chinese equity can sustain this type of performance, at least in the short term, I think some of those capital fund flow will at least come back for a tactical trading opportunity.
You were talking about Chinese innovation and that sort of growing global awareness of the strides that it's made in a lot of different sectors. We're just seeing, for instance, BYD jumping this morning to a record high, but it is all about that smart driving expansion, and they're essentially integrating that into every vehicle, not perhaps quite every single one, but certainly at a lower price point than in the past. So how does this play out, and are there any sectors that you look at in particular for that?
Yeah, I think that's a great point, because when we think about AI, previously, the assumption is that you have to spend a lot of money and only big companies can use AI. I think what DeepSeek has done is that it opened up our mindset into companies that previously are a little bit more constrained on resources. So to your question about what sectors, I would imagine that some of the more traditional sectors can benefit now because the threshold of embracing AI is now much cheaper than previously expected.
And a part of that BYD story, in fact, is not just the integration, as you say, of that, the automation, but also they mentioned that they're going to start integrating DeepSeek. We don't have a timeline yet for that. But I'm interested in this criticism, perhaps, about the difficulty in monetizing AI, which is going to be a challenge. You know, of course, it's been a challenge for the US. It's going to be a challenge for China as well. How do you assess that? And how quickly do you think we will start to see, DeepSeek or perhaps other Chinese AI comparable platforms being integrated into other parts of the tech universe?
Yes, I think indeed that is part of the debate between this whole hardware versus software, which started in the US, and now we're seeing it happening in this part of the world. I think there is an advantage of using something that is open source or relatively cheap, because it changes that cost-benefit calculation. And to my earlier point, that is why some of the more traditional industry who we previously thought would not be the first mover in AI, they may at least give it a thought that they can embrace it. And so far, what we have seen is that when it comes to the application side, the Chinese company has plenty of experiment over the past few years. So perhaps now that with the tool, they now have the ability to deploy it a little bit more quicker, which is something that may have also caused the revaluation of the technology stocks in Hong Kong as well.
Okay, thank you. Excellent. Jason Lui, Head of APAC Equity and Derivative Strategy at BNP Paribas. In a moment, we are also going to be keeping an eye on BYD, on markets and stocks. Stay with us. There's plenty more ahead. This is Bloomberg. We are watching this big rally in BYD today. We had this 20% jump up last week, and really ahead of this anticipated announcement. Now we are seeing, it's really about this driver assistance features being integrated into all of these models. Also keeping an eye on some of these other chip names here as well. Stay with us. This is Bloomberg. Welcome back. Good morning. You are watching The China Show, and we are counting down to the open of markets. 40 seconds or so away, Belle, and it does look like we are seeing a little bit of positive momentum coming back in.
Well, we had a very good night overnight for the Golden Dragon Index. That's always a good leading indicator, and you're continuing to see that southbound rally as well. So there's a lot of conviction from mainland investors into Hong Kong, and the reasons for that, we were just discussing there about the amount of innovation really that's coming out of China. You had these announcements, for instance, around BYD. They're going to be integrating driverless features into virtually all of their future vehicle lineup. And then adding to that is that investors continuing to look for these ways to try and insulate themselves from the risk. But let's take a look at how China is coming online this morning. And it is that tariff risk that's very much in play.
Yeah, absolutely. And perhaps there was, to your point about sort of the positive momentum we're seeing, perhaps there was a bit of a delay because we had all of this very negative tariff headlines coming through from Trump right at the beginning of trading when we came back from the spring break. And it did seem that folks were relatively tentative. It now seems some of that is now behind us. Some of those reservations are kind of perhaps in the rearview mirror.
Yeah, you've got the CSI 300 fairly flat. And I think really if you were to take a look at where have we been in 2025, we're probably about 1% higher at this time. But where you are seeing, of course, a lot of the movement is in Hong Kong. And if you take a look at how that dashboard is faring this morning, it's that story really around the tech gauge. Again, you're continuing to see gains there, a little bit undershooting the broader index this morning. But certainly, as we said, a lot of the activity, even just yesterday, coming into the session and again, coming from mainland investors back into Hong Kong. So that's the state of play there. Taking a look at some of the movers in particular, of course, metals, miners, very much in focus this morning off these tariff concerns. Chinese names moving higher for the most part here. So Trump, of course, issuing these steel aluminum tariffs. They're going to start from March 4, so just in a couple of weeks' time from now. Apparently no exceptions. Australia could be one exception, but that certainly does seem like he's taking a hard stance on this one. It's not just what's happening in the metal sector. Trump is already signalling there could be more to come. So cars, chips, those could be next. Taking a look at how we're seeing it for trading this morning, you mentioned BYD, of course, and that story is very much around what was unveiled yesterday. They are having a smart driving expansion. So they're going to be integrating their so-called God's Eye driver assistance system, making it standard for all vehicles that are priced from around $14,000 in China. SMIC, those earnings due later today. Also taking a look, of course, what's happening in the property sector this morning. Yeah, perhaps one of sort of the laggards, really, in this space, as it has been for so many years. But a little bit of good news. China Vanke has won more support from authorities as its largest state shareholder agreed to provide up to $383 million to help that struggling developer repay its outstanding debt. For more, let's bring in our China correspondent, Min Lo. Just talk us through the significance. And it's not just the sort of total, which is perhaps not that large, but it's also, of course, who is providing this assistance and the maturity wall that we see this year.
Yeah, so it is pretty significant because, as you said, it's actually quite rare that the state comes in to support a company like that. So Shenzhen Metro, which owns a 27% stake in China Vanke, they have agreed to a 3-year secure loan agreement extending 2.8 billion yuan in loans in exchange for about 4 billion yuan in collaterals from China Vanke. And it's not just that. You have an official from Shenzhen Metro actually taking over the reins of the company after a management shake-up last month. 2 top executives from China Vanke stepping down. Remember last month, Rebecca, we were just chatting about the unknown whereabouts of the CEO who was reportedly taken away by the police. That was reported by local media, but that article was later taken down, so causing some confusion there. So 2 top executives stepping down, Shenzhen Metro official taking over here, and perhaps that signals that maybe China Vanke is that company that is maybe just a little bit too big to fail because it is one of the top 5 developers in China. It hires about 130,000 employees in China, and we've seen the bond prices, if we can pull out that chart, it dropped by about 30% last month, but it's recovered most of that losses since then after news of this state intervention came out.
Too big to fail. What about Country Garden as well? Because that's obviously been another developer that we've tracked for a long time, but sales continue to worsen.
Yes, another big developer among the top 5 as well. And also it's been seeing double-digit declines in sales since mid of last year. And the bad news is in January, it saw another 59% decline in sales and really not looking very good. If you look at the trend, it's been trending down since October of last year, which means that the government support measures so far, those pledges to stop the decline in the property sector, perhaps just isn't enough just yet to help revive confidence. It looks like home buyers are still favoring the purchases of second-hand homes over concerns that some developers may not be able to complete these houses in time. And so, yeah, Country Garden expected to reach an agreement with a group of key bondholders by the end of this month. They're still negotiating over details like the payment deadlines, the conversion prices, but the company has pledged to reach the agreement by end of this month, and they have secured that extension in the hearing until May from the Hong Kong courts.
Yeah, I guess the problem is when you're sort of counting on that turnaround in sales to help with those discussions as well. But that was our China correspondent, Min Lo there. And a quick look at some of the corporate stories that we're tracking this morning. A lot of focus on the tech space, actually, because a group of investors led by Elon Musk has offered to buy the non-profit that controls OpenAI for $97.4 billion. In a statement, Musk says he hopes to return OpenAI to being the open source, safety-focused force for good it once was. OpenAI CEO Sam Altman rejected the bid, using a post on Musk's X platform to say No, thank you. The unsolicited bid escalates a clash between the Tesla and SpaceX CEO and the AI company that he co-founded. TSMC is expecting first quarter sales to be at the lower end of its forecast range due to production losses from last month's earthquakes. The Taiwanese chipmaker says quake losses were about $160 million. TSMC is maintaining its first quarter gross profit margin forecast and full-year outlook with revenue guidance of up to nearly $26 billion. Hon Hai has reported a 3% rise in January sales and strengthened its first quarter outlook. The Taiwanese firm is NVIDIA's main supplier of AI servers and Apple's biggest iPhone assembler. It reported revenue of over $16 billion last month and says first quarter growth will top the average level over the past 5 years.
Now, turning our attention to one particular stock here, US-listed shares in Chinese biotech firm Ascentage Pharma have gained nearly 10% since its debut on the Nasdaq late last month. It's also been listed in Hong Kong since 2019. You can see that chart just on your right. And for context, the Ascentage up about 7% since that IPO in Hong Kong versus the broader healthcare sector stocks in Hong Kong down around 46, just to give you a little bit of context there. And so this Suzhou-based firm, it focuses on blood cancer treatments, and its US listing came despite what we've seen as this broader downturn in the healthcare sector and in the biotech sector over the past few years. Now, joining us exclusively is the co-founder, chairman, and CEO of Ascentage Pharma, Dajun Yang. Thank you so much for joining us. I want to talk first about one of your lead drugs, which is targeting leukemia, a drug. You have this partnership with Takeda. They've paid $100 million up front for this option to license. I want to ask, is that decision contingent on any kind of milestone, any kind of specific clinical data? And what should we be looking for when it comes to this lead drug for you?
Thank you for the opportunity. Very good question. We are very excited that we entered this global partnership with Takeda last summer. And this collaboration is a really important milestone for our global pharmaceutical mission. This particular product addresses the unmet medical need globally, especially for those chronic myeloid leukemia with mutations, resistance. And this partnership is right now is in the option agreement. Takeda paid us $100 million as an option agreement and also equity investment. Right now is pending the some potential FTC clearance. But more importantly, we already have FDA cleared global phase 3 registration trial. So at the time, either they get a clearance from FTC or when the patent expires middle next year, they can exercise the option, which they will have a right for global commercialization and the global market outside China.
And are you seeking any other deals or discussing any other deals for other assets in your pipeline?
Very good question. Ascentage has been around for 15 years. We started in the U.S. In Maryland, and we have been focusing on the truly innovation, global unmet medical need. Currently, we have 3 clinical stage assets focused on the apoptosis pathway. According to the Frost Sullivan, we are the only company globally with 3 targets focused on apoptosis pathway. So in addition to the olverembatinib, the lead compound, we also have a late-stage asset targeting the BCL2, which is also FDA cleared global phase 3 registration trial for the chronic lymphoid leukemia and many other leukemia disease like AML, MDS, or multiple myeloma. So, and multiple other assets focus on unmet medical need. They all are in the clinical stage with the FDA cleared INDs. So we have a total of 5 clinical stage assets in the clinical development, US and the rest of the world. Especially those are all FDA cleared clinical stage assets.
So the lead drug that we're talking about here is olverembatinib, which treats leukemia. The other drug as well that you've nodded to there is listificlax, which, as I understand, also treats leukemia. That's a drug that you're planning to launch, I believe, in China this year. But how are you planning to launch that? Is it something that you're, again, going to be looking to a company like Takeda to execute, or is it something that you want to do on your own?
Very good question. First, we focus on the R&D for the global market. Second, with many other pipeline stuff, we'll continue doing the parallel, focus on the clinical development and the business development, looking for the global partnership that can, compensate and have a synergy. But more importantly, I think we do have a team in the U.S. And Australia and Europe can focus on the continue develop those clinical late-stage assets. But of course, we are actively looking for a partnership for the global commercialization.
And what's the profile of the company that you're looking for? Can you share some sort of size and scope of who you'd look to?
I think we're looking for the partners that can bring the value, bring the complementary expertise, especially outside China, in US or Europe. More importantly, we're looking for a partner that will bring the more resources, more capabilities for the clinical development, especially in the commercialization for the global market.
Dajun, it's hard to get away in today's climate from this issue of national security, and Chinese firms have faced a lot of scrutiny in the US, including, of course, Chinese biotech. I want to ask to what extent that your sort of firm operating in that US context, you're not only having to sort of compete with your US peers, your US competitors, but also outcompete to try and combat some of these geopolitical risks, to try and combat some of these concerns from investors, even just about the messaging from a sort of liability point of view?
Very good question. I think a lot of people are focusing on those potential changes. We are closely monitoring as well. But I'm a scientist. We are a business focus. We focus on innovation, focus on truly globally and mathematical need. Our products, if we develop successfully, cleared by FDA, can save patients' lives globally. So I think that's really the first thing first. As a company, as a scientist, we focus on the innovation, focus on globally and mathematical need. I think that's the most important thing. Second, Ascentage, actually, we are a global biopharmaceutical company. We started as a team, as a founder in US, and we are doing well in the last 15 years in both the US and China for the clinical development, focus more on the mathematical need in the R&D space. And of course, we will lead those questions to the politician. I'm sure they will take care, looking for the best interest for the patients, right? For the patients, that's what we all need. And I think that's the global issue we need to solve to develop best medicine that saves patients' life.
I mean, to your point about this need to solve this global issue, you are one of these generations of the so-called sea turtles. You spent 30 years training in US institutions with US mentors, and then took that expertise back to China, and you had this relationship going back and forth. But that type of academic exchange, that people-to-people exchange, has really come under threat over the last few years as we've seen the relationship between China and the US deteriorate. I want to ask, I mean, how optimistic are you about the future, the next generation of US-China scientific development? Are you one of the last, at least in the last next 10 years, 20 years, that we'll see of this generation who really benefited from what we might now see as a sort of golden age of scientific collaboration?
I think that's a very good point. Actually, I came to US almost 40 years ago, and then did my PhD and a postdoc training in the leading institution. And more importantly, I think as a scientist, the really good exchange collaboration between US and the China scientists are very important and a benefit for all parties. We certainly hope this trend will continue. But more importantly, I'm also really optimistic that our collaboration and the mutual benefit to the peoples in U.S., China, and the global will continue. I think we see that the trend, sometimes maybe there's an up or down, different opinion, but overall, I'm really confident and also to see the benefit that this collaboration will continue, will bring the value to people in U.S. and China. But of course, there's also competition. But competition is good to have, right? As long as we follow the rules, follow the regulations. I think that's what we have been doing. Established, 15 years ago, started in U.S. My first company started in 2003 in U.S. That's our previous company for Ascentage. I think as long as we focus on the science, focus innovation, focus on the mutual collaboration, this collaboration and a good relationship will continue and the benefit for people around the world.
Dajun Yang, thank you so much for joining us, a co-founder and chairman and CEO at Ascentage Pharma there. And another big biotech interview coming up on the China Show. We have the CEO of Australian giant CSL joining us exclusively to discuss their first half profit miss and the sector's outlook. This is Bloomberg.
Taking a look at how metals are faring this morning, and we're seeing aluminium, copper just a little bit under pressure, but those, of course, are the London contracts. The US contracts actually moved higher after Trump pushed out these 25% tariffs on steel, aluminum. Those are going to take effect in early March. Gold, though, that's where we're really seeing a lot of the moves this morning, and that is actually hitting a fresh record high. Let's get more on the outlook for gold. Bring in our Asia Energy and Commodities editor, Andrew James, joining us from Singapore this morning. And Andrew, I mean, there's a confluence of factors that are really driving the moves in gold and have been for quite a while now. But let's start off with what's sort of front and center for you. Are we talking about tariffs here? Are we talking about the Fed? Are we talking about China buying? What's the biggest factor?
Well, for gold, I think we're mainly talking about Trump right now. Obviously, the tariffs, the worries about expanding trade wars, also some of his geopolitical proclamations is really making people nervous. That's all feeding into haven demand. Gold's up about 11% this year, and that was after a 27% rally in 2024, and it's been setting successive highs, all the time. Citi, we're not far off 3,000. Citi said the other day they expect it to go through 3,000 pretty soon. The restraining factor for gold, I guess, is if Trump's policies really ignite inflation, and that will mean that the Federal Reserve will have to slow down or pause rate cuts. That will be negative for gold because it doesn't pay interest, but who knows, the haven demand could outweigh that. Obviously the tariffs, we got the official word on the aluminium and the steel tariffs. Funnily enough, Canada is going to bear quite a bit of that, even though Trump delayed the tariffs on Canada and Mexico. More than half of US aluminium imports are from Canada. Canada's among the biggest steel exporters to the US, along with Mexico and Brazil. Canada bearing the brunt of that. Liam Denning, the Bloomberg opinion columnist, has actually suggested that Canada should look to weaponize its oil exports to the US, given how closely the US and Canadian energy systems are interlinked. And he was talking about an export tax or even an export ban in a more extreme scenario.
Andrew, you've touched on aluminium there and some of the impact, but where else are we seeing potential impact elsewhere in the commodities space? And, I suppose to your point about this possibility of weaponizing other commodities, weaponizing oil or whatever it may be, how are some of the ways that countries might be able to retaliate or respond?
Canada would be in a strong position on oil. I think we're seeing a bit of a reordering of sort of global oil flows that could accelerate depending, where these trade wars go. Gold is the main beneficiary, of course, of all this uncertainty. And it would depend. I mean, supply chains can sort of reconfigure pretty quickly, but often that's going to add transport costs. So who knows what's going to happen from here, Rebecca?
I'm sure we'll be talking to you again. We'll be keeping an eye on this space. Bloomberg's Asian Energy and Commodities editor, Andrew James there. There is plenty more ahead. You're watching The China Show. This is Bloomberg.
Taking a look at some of the movers in the session so far this morning. Actually, BYD, it came online. It was hitting a fresh record high, up 4%. We're starting to see that kind of giving up some of its gains, but we have seen it integrating driver assistance technology into all of its, or virtually all of its vehicle lineup moving forward. Other automakers, though, they're under pressure off the back of this announcement, so certainly it is sending some shockwaves. But what else we're tracking in the session so far this morning is shares of TSMC. Over in Taiwan, we had those monthly sales figures. Some of the other movers more ahead.
Welcome back to the China Show. Good morning. We are about half an hour into the session. Let's just take a look at the HSI. Now, we came in today thinking there was a little bit of positive momentum. Annabelle, it does look like we are giving up some of that momentum so far. Automakers, apart from BYD, in focus here, back dragging down, at least when it comes to the HSI index, just a touch.
Yeah, that's right. Healthcare, real estate, consumer staples, really they're all under pressure so far this morning. But we have, of course, seen a very good run for the Hang Seng gauge over the past couple of weeks as investors really start to pile into that. A lot of conviction as well from mainland China. But what else is really in focus this morning is what's happening in the commodity space, because of course, just a couple of hours ago, we had President Trump signing these series of executive orders. He's targeting steel. He's targeting aluminium. He wants more to come back onshore in the US. The market reaction to that, we have, of course, been monitoring the different contracts. You've got the Dalian one, of course, that's the China one, London, the primary one, but then you've also got what happens in the COMEX ones, the US listing, and we did see those moving a little bit higher. Gold actually is pretty much the standout so far today because we're at a fresh record high. A lot of haven demand coming through, a lot of uncertainty around what exactly the Fed can do. Are they going to be hamstrung if these tariffs do indeed become inflationary? That's the big risk. Dollar as well to note, because we have seen a bit of a move coming through in currencies. Dollar strength back in play, and you see that really against those major trading partners so far, the Canadian dollar, the Mexican peso, also, of course, the Aussie dollar, another one to note, and keeping an eye on what's happening with the Taiwanese dollar, but that's also the story around sales for Honhai, TSMC. We had those monthly figures overnight, but that's a tech story. Let's get back to the tariffs one.
Yeah, well, that's right. I mean, more on this story about Trump's tariffs. It feels like we've been discussing this for years. It's really just been 2 or 3 weeks. But for the latest, let's bring in our chief North Asia correspondent, Stephen Engel. Just lay out how sweeping these tariffs might be.
Well, for the record, I've spoken about tariffs every single day since the inauguration. That's true. They're going to be sweeping. It's an expansion and an enhancement, if you will, of what Donald Trump did on the steel and aluminum tariffs in his first term. This time, no exceptions. They basically got exemptions for Canada, for Mexico and Brazil in the first term. It doesn't matter if you're an ally. It doesn't matter if you're a key trading partner. The tariffs of 25% on imports to the United States of steel and aluminum are going to apply equally to everybody. So again, Canada, Mexico, Brazil, South Korea, Germany, you're on notice that those tariffs are going to go into place. Now, the one exception possibly because with Donald Trump, there's still 3 more weeks, right, until these take effect on March 4th. 3 weeks to the day. So we're going to be talking about this for the next 3 weeks as well. That's when it takes effect. So there is room for negotiation, right? And already Donald Trump in this impromptu press conference as he was signing the executive orders essentially said he had a phone call with the Australian Prime Minister Albanese. He said he's a great man. We had a great conversation. We will consider possibly giving an exemption to Australian steel. And that would be because he says the United States has a trade surplus with Australia, and Australia has that deficit, largely because of the large aircraft orders that come to Australia. But still, he was also asked about the UK. What about the UK? An exemption, a close ally? And he says, no, the UK, we have a trade deficit with the UK, so that won't happen. So again, we're going to be circling our calendars for March 4th. That's when this takes effect. But there's going to be new tariffs as well. He's threatened about on automobiles, particularly in Europe. He's talked about chips. He's talked about pharmaceuticals, and then a broader reciprocal tariff.
You know, I think it's interesting when you take a look at the market reaction, and I was just mentioning before, we've got these different contracts that we can check for all commodities, but Dalian, COMEX, LSE as well. And this morning, when you take a look at how iron ore is faring in Dalian, for instance, the Chinese contract, you're actually seeing it moving higher and pretty much outpacing those other contracts. China is the world's biggest steel producer. So what does that kind of tell you about how it could interpret or react to these tariff risks as well?
Well, sure. So they're still importing iron ore. They still have domestic demand, obviously, as they develop the economy. But the economy has definitely slowed. There's no doubt. And they've become a larger exporter of its steel. And some would say it's excess steel. So, yes, China is down the list a little bit. Overall, over the year, I believe China is number 4 on the list, or number 5 after Taiwan as well, for the nations that export steel and aluminum to the United States. Not in January, though. They were not on the top table. But again, they're finding ways to get their steel into the market and then indirectly to the United States, despite the fact that Biden administration did impose a 25% tariff in September on Chinese aluminum and steel. So what's happening, according to the White House, is, for example, I'll give you 2 examples. They're claiming that China is, because of the slowing economy, they're exporting their steel to places like Mexico and Canada, which are the 2 largest exporters of steel to the United States. Then in turn, those are lower priced steel products from China. Then in turn, the White House says Mexico and Canada are selling their higher priced steel into the United States. So indirectly, China is having an impact and getting around the duties that way. They're also saying China is selling steel to places, third countries like Vietnam. Then Vietnam finishes the steel and then rebadges it, rebrands it, and exports it as Vietnamese steel. So Donald Trump, that's why he's going across the board, 25% tariff on everybody. Doesn't matter friend or foe, 25% tariff.
Yeah, that's what it's all about, trying to close these loopholes, it seems. That was our Chief North Asia correspondent, Stephen Engel there. Let's get more on this, the market reaction. Bring in Taosha Wang. She's portfolio manager at Fidelity. And you know, you take a look at the volatility gauge, and we have seen those rising across the board really this morning. Is that what you kind of can read from all of this? Just there's more uncertainty and there's more unknowns ahead for markets?
Certainly. I think a lot of sentiment is shifting in the China market, or market that's driven by actions in China. Certainly, tech in the tech space, we've seen a lot of China-driven sort of price actions sparking a lot of volatility. So I think the market is still working out exactly what you think.
I mean, in some ways, it's been a tale of 2 narratives here. On the one hand, the tariffs and some of the reversals, and on the other hand, this story about Chinese AI and DeepSeek. What kind of offset do you think that the DeepSeek innovation is really going to provide Chinese markets? And is that momentum going to be sustained?
I think the DeepSeek is it's a tremendous moment in many different ways. To start with, I think it's a much needed boost of animal spirit for Chinese market, Chinese economy at large. I think it's so incredibly important in the context. The economy has been slowing, and there has been a lot of stimulus, and we just need that spark of animal spirit. So that is sort of a big picture take. But at a more granular level, I think DeepSeek puts China on the same competitive ground with the U.S. again, it will prompt, for example, a rethink of some of the chip export restrictions to China, because the two countries or the tech communities are finding common ground again. So to start with, all the major U.S. tech, the cloud providers have already, hosted DeepSeek models on their platform. So the simple math is that, the more popular this model, the more the cloud revenue they get. And we also think that as models become cheaper, more value is going to be created from AI application, commercial use cases. And certainly, cheaper AI model means sort of like a lower raw material cost for, all the AI adopters. And also take a step back. I think there's the grand vision of, general artificial intelligence, AGI is a common goal for a lot of people working on this very exciting front. So really, I think it reshapes a lot of the narrative there.
To your point about adding animal spirits, are you turning more bullish on the Chinese market? Are you turning more bullish on China tech? How much are you adding here?
We have added, and we do have an overweight position at this moment. I think there is, the economic fundamental. There's the animal spirit of it, and I think there's also just the fundamental possibilities that can come from, now that we have this new exciting tool. How do we make use of it, and what are the, potential economic collaboration with the rest of the world, U.S. included?
I mean, that sounds great, but at the same time, I'm sort of thinking about what is DeepSeek coming up against. And these are investigations, for instance, in the US that there are concerns, how maybe they used OpenAI. You've seen governments that are looking at shutting DeepSeek out for use as well. So there's a lot of headwinds facing this technology, and there's still unresolved issues within China. I think this morning, for instance, about BYD, and they're expanding the self-driving systems in their vehicles moving forward. And you see Chinese automakers that are falling off the back because it's just another leg that the BYD has in this race against its internal competitors. So there's still a lot of structural issues that haven't been resolved yet in the Chinese economy.
Absolutely, I agree with you. I think there's definitely a lot of excitement going on in the tech advancement space, specifically around DeepSeek, but all of it's, the peers I was asked on the radio earlier, how many more are there, right? This must not be the only one. So there's a lot of excitement, but I think with that excitement comes the controversy as well. And then I think it should be all well expected that there will be pushback, there will be excitement. So two step forward, one step back. I think it's a normal setup. But I think take a step back. I think with cheaper and more accessible AI, the economic pie of overall AI is going to be much bigger, and it will be sliced differently, whether it's between, for example, model training or application of the model, whether it's between inference or training, whether it's between US or China, whether it's between sort of, for example, customized chips or standardized chips. All of this, the pie will be sliced and diced in many different ways. And when you start to move people's slices, there will be controversy. But I think it's a fairly straightforward prediction that the economic pie will grow significantly on back of this significant productivity tool being more widely adopted.
Is your view on DeepSeek and AI, is it shifting your view on other markets? For example, are you still, in light of the tariff risks, in light of the AI developments, are you still liking, for example, the Taiwanese markets?
At this very moment in my portfolio, I am neutral on the Taiwanese market. I think, certainly there are companies that have an irreplaceable position in the global AI semiconductor chain. It's just, there's no argument around it. But, exactly to the earlier point of that pie getting resliced and redistributed, and, to what extent are they, affected incrementally? I think that needs to be carefully worked out.
It's interesting that you're neutral on Taiwan. Do you think that it's already had such a good rally that you don't see it extending much further from here, or what exactly is driving that?
Taiwanese market is, exciting market with very high quality company, but it's also a fairly cyclical market. So, it has gone up so much, it has performed so well, and I think it's just a regular portfolio management decision. Whereas, at the same time, the recent developments surrounding China has put China market back in the spotlight. And I think there's the typical portfolio flow between different regions and countries.
What do you want to see from the MPC?
I think policies supporting, from a market perspective, more pro-business kind of policies, policies that support and stimulate consumption on the back of, that sentiment. I think it's recovering, but I wouldn't say it's incredibly robust at this point. So protecting that, animal spirit, protecting that recovery, green shoots, is still, I think, the most important thing from a business and market perspective.
Yeah, and actually, we've been, of course, monitoring China consumer stocks this morning because we had CCTV, for instance, reporting overnight on a meeting with the Vice Premier talking about measures to try and boost consumption. But at the same time, we were just looking before at what's dragging down the Hang Seng this morning, and it is consumer discretionary as well. So how much conviction is there in the policy support at this point?
I think there's sort of the tension between, on one hand, there's the greater economic fundamental, that is, people are, evaluating their job prospect, earning prospect, personal wealth prospect. At the same time, I think there's, the excitement about various stimulus policy, excitement about tech breakthrough, excitement about, the stock market has gone up pretty significantly in recent periods. I think all of these factors are playing against each other. It's not going to be a straightforward line, especially for a market that has, gone some way from this past peak. But I think it is more likely that the market will experience a recovery from this level.
Taosha Wang, thank you so much. Taosha Wang, portfolio manager at Fidelity there. And still ahead on the China show, the CEO of Australian biotech giant CSL joins us exclusively after the company reported profit that fell short of analyst estimates. This is Bloomberg.
Taking a look at how BYD is faring this morning, it came on about 4% higher. It's given up a lot of those gains in the session today, but of course last week as well, a very strong rally for the major Chinese automaker. But the car maker, of course, overnight announcing plans to integrate the Chinese-made DeepSeek AI model into its EV software. Let's get more with our transport reporter Danny Lee joining us from Hong Kong. So it's not just the integration of DeepSeek, there's also this announcement to make virtually all of its future lineup have some sort of autonomous driving capabilities. How significant is this sort of announcement, do you think?
It's a game changer for the entire, at least Chinese EV marketplace, because very few car makers, if anyone, has been able to get any kind of autonomous driving system into their car models below, say, like 150,000 yuan. And BYD is putting it in models as low as 70,000 yuan, basically $10,000 US. So it's a big parting shot at rivals to A, to try and hurry up, and to B, try and move as fast and at the scale as which BYD can, and who themselves are so much better funded. And with its price points of not actually changing, this also disrupts the market because they have now something added extra to offer when it comes to what they currently have. And for all the notion that has fallen behind on tech in the last couple of years, this is them catching up and a little bit more. And particularly when you've got the competition against someone like Tesla in China as well, who have their own capabilities, this is something that they can do to match.
To Belle's point, we are seeing the stock give up some of those gains today. Is that just because we had such a big, this 21% run-up last week in anticipation? Are there other factors at play? I want to ask also whether the sort of tariff concern is playing into this at all.
I think everyone's focused on the gains, BYD's gains, and improvements it's making in the autonomous driving space. So I don't think too many people are worried about tariffs, given that, for example, BYD has very little exposure to the US market. But when it comes to the autonomous driving component, they've had such a run-up, last week, around 20% or so. So therefore, investors are taking a little bit of time to digest, and also just to assess how much can BYD deliver already of what they've done in 2024 and in the recent months to try and do even more. And with the extra costs that they're absorbing with this added hardware and features of software, can it actually deliver? So that's now the pressure on BYD without making any further price cuts to just deliver on what it has got with this extra features.
I want to ask too about this Chinese 10% tariffs on US cars. How much is that going to hurt, and who should we be watching here?
We should be looking at the foreign automakers generally, particularly some of those in the luxury space, particularly Mercedes. Though the actual level of tariffs for those, the impact is still quite limited because the volumes overall are small. But it speaks to the kind of tit for tat we have seen overall between not just China and the US, China and Europe in terms of this dispute over tariffs overall. So this is just a continuation of tariffs everywhere, frankly.
Just lastly, the integration of DeepSeek, how exactly would that look? And do we have any sort of details on the timing of integration as well?
The timeline is a little bit unclear. However, first of all, you can see BYD, from the component of drivers, asking for things in the car, using its voice activated system, easy enough to understand. But it's just when DeepSeek can process and crunch the data of autonomous driving in a much quicker fashion. It's that kind of power in the cloud that will give BYD that bigger edge when it comes to its drivers being able to deliver better results when it comes to the use of their car. And obviously, the hope is to deliver safer, better driving experiences.
OK. Bloomberg's transport reporter Danny Lee there. Plenty more ahead. Stay with us. You're watching The China Show. This is Bloomberg. Good morning. You're watching The China Show. A quick check on some of the corporate stories we are following this morning. TSMC is expecting first quarter sales to be at the lower end of its forecast range due to production losses from last month's earthquakes. The Taiwanese chipmaker says quake losses were about $160 million. TSMC is maintaining its first quarter gross profit margin forecast and full year outlook with revenue guidance of up to nearly $26 billion. And a group of investors led by Elon Musk has offered to buy the non-profit that controls OpenAI for $97.4 billion. In a statement, Musk says he hopes to return OpenAI to the open source, safety-focused force for good it once was. OpenAI CEO Sam Altman rejected the bid using a post on Musk's X platform to say, "No, thank you."
French Finance Minister Eric Lombard says France will keep a digital tax that hits major US tech firms despite past threats of tariff retaliation from President Trump. He told us exclusively about Europe's stance on trade talks with Washington.
President Trump is a deal maker, so Europe will answer as strongly as the position of the United States, and either we'll have our own tariffs or we negotiate. We'll see, according to the reaction of the United States, to the answer we are preparing.
Europe already has reciprocal tariffs in place on US steel from the previous trade conflict. They are now frozen. They could be unfrozen in March. Is that an easy response for Europe to go to? You unfreeze those reciprocal tariffs and let them snap back in?
I will not give the answer before we have the official answer from Europe.
How much pain is Europe prepared to inflict on the US?
We are prepared to do whatever is necessary in order to be balanced. We have the same tools, we have the same weapons if need be, and we will use them very calmly.
And we can assume that the European Commission has a list of targets that they would enact tariffs on.
We are ready because we knew that was coming, so we are ready.
Okay. President Trump has asked for a probe into taxes globally. And one thinks of the digital taxes that France has that overwhelmingly impact US tech companies and bring in, 500 to 700 million euros a year. Would you and France consider dropping that digital tax in order to avoid a trade war?
I'm not sure that the tax issue is related to the trade war, but we have put together a tax actually on the digital companies that we are maintaining because that is the law of France, and we'll see whether that comes into another type of conflict with the United States. I hope it will not, because tax is a question of sovereignty, and every country has its own tax system. We have our own, and we will stick to that.
That's the French Finance Minister Eric Lombard there. A quick check on some of the movers in the session so far this morning. Sticking with that AI theme, we're actually tracking shares of Mobvoi this morning, the Chinese AI developer. It says that it's integrated DeepSeek into its latest reasoning model. So we had seen quite a big surge there, a little bit under pressure. Gold stocks as well to track, because we have seen gold hitting a fresh record high. That is in part on these tariff risks, also buying from the Chinese central bank.
It's a very impressive model, a very impressive piece of work. I think the team is probably the best team that I've seen come out of China. So that said, I think a lot of the claims are exaggerated and a little bit misleading.
A lot of the key things from DeepSeek are reducing the cost of innovation, but also raising this question of data control.
If you have potentially more constrained resources, you can make a better job than if you have immense resources and stop thinking about what to do efficiently.
There is a global competition right now between whether the world's going to be built on small d, democratic AI rails, or authoritarian, autocratic AI rails, and that's the big takeaway from this.
I think there's been a lot of excitement, but we'll have to see if it materializes.
Some of our guests at the AI Action Summit in Paris there, speaking about the potential impact of China's DeepSeek. And China's DeepSeek founder, Liang Wenfeng, could become one of the richest people in the world thanks to his interest in his AI startup. Bloomberg's wealth reporter Diana Lee has more. We do have this, however, very wide range of estimates for the valuation of his company. Why do we have this enormous range, and what are the rationales?
Yeah, I would say it's really of an art than science at this point, because Bloomberg reached out a couple venture capitalists and tech founders, and they really come back with a wide range. As you mentioned, we have estimates from $1 billion to as much as $150 billion. Right. That's because different people see different estimates or potentials of DeepSeek, and we see that some people compare it with ChatGPT of OpenAI, which was valued around $300 billion. And they argue that DeepSeek could be worth at least half of that. We also have other comparables like Mistral AI, which was valued at around $6 billion. We also have Anthropic, $60 billion. Some Chinese AI peers like Zhipu AI, which was valued at $3 billion, can work as well. And we take all of that into consideration, and we know that the co-founder Liang Wenfeng holds about 84% of the stake of DeepSeek, and that could value him as rich as $126 billion, and that's almost the same level as NVIDIA's Jensen Huang.
You think about sort of the difference between some of these very public faces of those AI companies, but Liang Wenfeng is someone we haven't really seen much of, if at all, and is that sort of perhaps one of the issues, not so much that public-facing part, but just the amount of sort of unknowns and perhaps a level of secrecy around the companies? Is that what makes valuing it just so difficult?
Yeah, it's pretty difficult because it's a private company internally founded by the Chinese quantitative hedge fund High Flyer. So to the best of our knowledge, we have very limited information on its capitalization and its revenue data, its operating profit, etc. And also, we have to consider that DeepSeek is it's an open source model, so the monetization have some challenges over there. And also, some American enterprises might be concerned of using DeepSeek because of all these national security concerns, and all of that might impact DeepSeek's valuation as well. But on the other hand, if we do see a strategic Chinese investor into DeepSeek, such as we've seen in Microsoft and OpenAI, then that will make it a totally different story.
I mean, as you say, this is a founder that for some people really came out of nowhere, took people by surprise. Tell us what we do know about him and why he sort of sought, it seems, to stay out of the public eye.
Yeah, so it's a very interesting backstory. So it all started with a quantitative hedge fund. Liang Wenfeng and actually two of his college classmates, they started trading Chinese domestic stocks back in 2008. And interestingly, they don't really have many overseas experience or institutional trading experience, unlike many other quant hedge funds. And in 2023, they decided to use the hedge fund's R&D budget to try out with DeepSeek. And it was really a small group of young Chinese engineering graduates, and most of them haven't worked or studied outside of mainland China. So it's pretty impressive that how they put up such an impressive product over there.
That was our Bloomberg Wealth reporter there, Diana Lee, talking about how the DeepSeek founder could end up becoming one of the richest men in the world. But of course, you think about, well, who's the richest? And we know, of course, who that is. It's Elon Musk. But what's interesting is that for the first time in 2025, of course, we're still in the early innings of the year, but for the first time, his net wealth has slipped. But I mean, it's below $400 billion. So, you know, it's still, there's still a lot in his coffers. But, of course, we have seen a bit of a slide, and that really relates to the slide that we're seeing in Tesla's stock. It's down nearly 30% since it hit an all-time high back in December. Of course, that optimism of the Musk-Trump relationship playing into that. But it also just speaks to the level of competition that Tesla faces, not only weaker sales in places like Germany, for instance, but what about what's happening in China and the competition with BYD?
Yeah, absolutely. We look at what's happening there. I mean, BYD, we're seeing it reflected in the stocks today. The non-BYD auto names really under pressure. We had Danny Lee, our transport reporter, on earlier, underscoring just how difficult it's going to be for these other names to now catch up with BYD. It's at such an advantage. And in part, it sort of is this quite ostentatious or very public-facing show to integrate all of that new autonomous assisted driving technology into nearly every single one of its vehicles.
Yeah, and actually just thinking about that sort of level of innovation, it goes back to what we were speaking with BNP Paribas about in the last hour, and just the amount of innovation that's coming out from China as well. And you're seeing that as well reflected in the investment flows, particularly, for instance, one of the most read today is the billionaire investor David Tepper, and he's someone who's been ramping up. I mean, if you think back to September last year, he actually was famously quoted as saying, buy everything related to China. But he has been continuing to build up. We've had those latest 13F filings, and you can see lifted his stake, particularly in JD.com, Alibaba, but also we saw him continuing to add exposure through ETFs.
Yeah, I'll put some numbers on that. Increasing his stake in JD.com by 43%, Alibaba Group by 18% last quarter. And of course, again, just to underscore, before we saw this rally in DeepSeek, you know, helping to boost markets.
Yeah, and from Musk, of course, the big story there with Musk today is that bid to buy OpenAI in a consortium, but also related to OpenAI and that further integration of and proliferation, really, of the AI platform worldwide. Softbank has been very closely linked to that effort as well, and they're said to be looking at a technique called project financing to pay for a planned investment into Project Stargate. That's alongside OpenAI, Oracle as well. But let's get more with our tech reporter, Minjong Lee. Minjong, that's been sort of one of the key questions. I mean, SoftBank made this big investment pledge, but we didn't really know how they were going to go about financing it.
Right.
What do we know now?
Right. Just like you explained, project financing is a model and a structure that they're exploring right now. And the reason why we're seeing so many different media reports out there about like 15 billion investment, 19 billion, 25 and whatnot is because a lot of this is still like in discussions and none of this has been decided yet. But I think it's best to first try to understand the entire structure because it's such a huge sum of money. And the way we understand it based on the reporting is out of the $500 billion sum, assuming that that figure is reached, we understand that 10% of that would be raised through equity, roughly. That is one scenario, which means the remaining sum, about roughly 90%, would be a combination of other means, preferred equity and a lot of debt, senior loans and mezzanine debt. And within that 10% equity portion, I think discussions remain on how the split will be among the equity partners, SoftBank, OpenAI, Oracle, and MGX. And all of this has to be decided going forward.
To what extent are these other developments that we're seeing elsewhere in this industry? So, for example, the development of DeepSeek, as well as this unsolicited bid that we've seen for Elon Musk for OpenAI. How much are these other things sort of playing into the decisions when we look at this sort of SoftBank, this potential deal?
I think it definitely makes the current situation much more difficult. I mean, the financing structure is very complex as it is, even for the people trying to figure it out inside SoftBank. And with DeepSeek, people saying that the cost structure could change for AI and all of this, whereas the ongoing kind of rift between Elon and Sam and all of this talk about OpenAI valuation and funding definitely is playing into what would be and could be the best way to fund the Stargate project, and also all this talk about a potential funding round for OpenAI. And the math between the funding round for OpenAI and the financing for Stargate project is kind of being discussed together along with this, which is another big variable into how the financing structure will ultimately look like in the end. So there is definitely a lot more questions to be asked and answered.
OK, well, we'll stay with you and come back. Bloomberg technology reporter Min-Jong Lee there. And coming up also on the China show today, the CEO of Australian biotech giant CSL joins us for an exclusive conversation on the company's first half profit miss, plus the outlook amid trade and geopolitical tensions. Stay with us. You're watching the China show.
We're taking a look at some of the Aussie miners in the session this morning, and these are under pressure so far. Of course, these would be a very big casualty if Donald Trump does follow through with those tariffs or those planned tariffs on steel, aluminium imports. The Australian Prime Minister Anthony Albanese this morning saying that he had a very productive conversation with President Trump, where he said that they had agreed that at least there would be some consideration for an exception. President Trump as well nodded to that, but at the same time very firmly said, again, this is going to be a broad-based levy that's added. But shares of the Australian biotech company CSL are under pressure as well today. That's after it reported underlying profit for the first half of just over $2 billion. That was under the average analyst estimate, driven by weaker revenue in its Seqirus vaccine business. Let's get more with our Asia Trade co-anchor Heidi Stroud-Watts in Sydney. Heidi.
Well, that's right. Joining us exclusively now is the CSL CEO and Managing Director, Paul McKenzie. Paul, really great to have you with us. And I wanted to start off on your optimism that the company can get to double-digit growth in the medium term. Can you tell us about the strategy to improve uptake and how you plan to make that outlook come to fruition?
Well, great. Thanks, and great to be here. Thanks for hosting us, and glad to talk about CSL and our journey. We're a very diversified company, having three major business segments: CSL Behring, CSL Seqirus, and CSL Vifor. And those companies are performing very well. That's why we can reaffirm our earnings. We had some headwinds in the first half for our Seqirus vaccine business, but that will be offset by strength in that business in the second half, where we're able to supply the majority of the world's pandemic needs for avian flu. So it's really a timing issue that you're seeing versus anything in the fundamentals of our overall business model. The Behring business and our return to gross margin, revenue growth and gross margin expansion are going well. Our Vifor business, which we acquired a few years back, is continuing to make a huge difference around the world in both iron deficiency as well as nephrology. So we're quite confident in our ability to deliver double-digit earnings growth.
I also wanted to ask about that 4% R&D expense drop. Where did you see the cessation of programs, and how does that reflect priorities?
Yeah, that's really just a timing matter. Again, we had a large trial that ended this quarter, And obviously the expense does not continue in. So that's really a reflection. Last year, that trial was in full steam and the expenses were much higher. So it's really just a timing issue. We don't run a 6 month by 6 month business, right? We're a long-term company with a long-term history of delivering high double-digit earnings, 10 to 15% earnings.
The flu vaccine demand levels was an issue in the US market. Can you tell us about just how much of a drop in demand that you saw and whether that's expected to continue?
I think if you look at the overall market, it was about a 10% reduction if you look at other competitors and ourselves. And, predicting vaccination rates is something that, is hard to do. There's a mix of things that are occurring, both from a consumer apathy, from a segment change. So we look forward to continue to educate and make sure people are aware of the real benefit for public health of the vaccine market. This year's flu is going to be one of the worst flu seasons in the Northern Hemisphere, and it's extremely important that people get vaccinated. And we saw in the U.S. in particular, the 18 to 64 age cohort have the biggest reduction in vaccination rates. Now, around the world, most regions have returned to their vaccination rates pre-COVID. So we think there's real good reasons to believe that we'll see that turn in the U.S. over time. Exactly when that will be, we'll see.
Robert F. Kennedy Jr. is closing in on that confirmation for Health Secretary, and he's been an avowed vaccine skeptic. How do you counter that, as if that is the broad government mood when it comes to appetite and trust in vaccines?
Yeah, we're a global company. We work in 104 different countries. We work with governments all around the world. And so what we do is we provide the right scientific data. We make sure people have the facts. And in that case, people are looking, his request is more transparency on the data, and we're glad to have that conversation. We have the data that shows the benefit to the healthcare systems and to public health for the benefit of flu vaccines. We've modernized our technology platform in that space and can respond to needs both from a seasonal view and a pandemic view around the world.
Well, you spoke about the avian flu vaccine, and you certainly spoke about contracts with a number of governments around the world. Can you give us an estimate or an idea of how much demand there is and what it tells us about the level of preparedness?
Yeah, each one of the governments, they're confidential negotiations, so I wouldn't want to get into, this government ordered that or that government ordered this. What I can say is we're prepared to provide the governments what they need, and the contracts vary in terms of whether they want finished doses or whether they want just the antigen or they want a reservation fee to make sure that if a pandemic did happen, that we'd be ready for them and have the appropriate capacity. So, the avian flu is a serious issue right now. We're glad to be able to bring a solution for the global marketplace.
If there was another pandemic, how quickly could you deploy to scale?
Yeah, typically, depending on the actual virus itself, but our goal is to be able to deploy in less than 16 weeks.
I wanted to ask about the Vifor business selling iron infusions as well. What do you see the outlook when it comes to pricing competition to be like, particularly in the European market where we're expecting that generic to be introduced?
Yeah, I'd say it's going to what we expected from a plan viewpoint. We brought on a lot of skill sets a few years back when we acquired Vifor, who know that business very well in terms of the tender business in a generic marketplace. We have seen volume growth, which is the important part. We grew 6% on volume this year. But the typical generic profile for a specialty medicine like that is on order around 15 to 20% price depreciation in the first few years. And that's what we've seen. But our goal is to win the volume and to expand in our geographic marketplace. We've expanded into China, into Canada, and that's really the secret of CSL, is to make sure that we are geographically meaningful, right? Like I said, 104 countries for our Behring business.
What about the geographic footprint when it comes to the plasma business? Where are you seeing the most strength there?
Well, we have strength around the world, right? I mean, I'd say if you look at how we do our global footprint from a manufacturing viewpoint, we have large investments in Europe, a large investment here in Melbourne, Australia, and significant investments in the U.S., including many of our plasma centers that are distributed there. So in terms of the business, IG, immunoglobulin, we grew 15% around the globe for this past half, which is tremendous. It's a significant unmet need in primary immune deficiency and secondary immune deficiency, as well as CIDP. And we're glad to be able to provide both intravenous as well as subcutaneous solutions for patients around the globe. So IG growth really has been strong, both volume in US, Europe, as well as the rest of the world.
You talked about, of course, to your point about having such a global geographic footprint. Have you done a risk assessment in terms of how trade tensions, tariffs, a potential new global trade war would affect some of your supply chain operations?
Yeah, the good thing about being a global company is we can model many scenarios and we can adjust as needed. It's a very fluid time, so it's, what exactly we'll need to do, we'll see. But we have the flexibility with our product mix and our global supply chain to be able to adjust as needed to make sure, most importantly, we get medicines to patients that need it and that we make sure the business is profitable for our shareholders.
I wanted to bring things closer to home as my last question. We're obviously getting closer to a federal election here in Australia this year. Is there sort of one change that you would want to see policy-wise from either of the major parties, whoever is in government after that election, that's most important to your business?
For our type of business, and I would say this is the same comments we have everywhere around the world, we're looking for governments to invest in scientific education and making sure that access to that scientific skill set is available through the right channels. So we rely on expertise and talent, and obviously being able to grow that talent and access that talent around the world is important to us.
Paul, really great to have you with us. We appreciate your time with us today. Paul McKenzie, who's the CEO and Managing Director at CSL, one of the stocks we're watching today, Rebecca.
Thanks, Heidi. And if you're a Bloomberg subscriber, you can catch up on all of our interviews by using our interactive function, TV Go. You can also join the conversation by sending instant messages to our team and our guests during the live show. You're watching The China Show. This is Bloomberg.
Taking a look at how markets are faring, we are nearly 90 minutes into the session today, and we're seeing the Hang Seng giving up its gains. We actually had seen futures pointing to a slight advance, but we're under pressure so far today, and there's a couple of different reasons for why possibly that are playing into this, and one of those has to be, you think, yes, we have the optimism around BYD and that stock hitting a fresh record at the open. Given it's going to be integrating self-driving capabilities into virtually all of its fleet, but other auto stocks are significantly in the red today.
Yeah, absolutely. Geely down around 9% so far, but also we're seeing more widely consumer sort of taking a bit of a hit, struggling today. That's despite, Li Tian coming out to sort of promise more support for consumers and for the consumption sector. And of course, we're sort of weighing to see whether or not substantively more comes from Beijing in the MPC later this month.
Yeah, and actually taking a look at the MSCI China there, and you've got, basically every sector in the red. The only one that's actually up today is the real estate one so far. But again, the other story, of course, the big story, we can't go without another mention of this one, is the Trump tariffs. And we've got President Trump just in the last couple of hours signing a series of executive orders, but he is firmly targeting imports of steel, aluminium. He's wanting to close what he would say are loopholes that the likes of Russia and China are also exploiting.
Yeah, Australia potentially an exemption. Some discussion now. Prime Minister Albanese saying that, yes, perhaps there might be. Trump also nodding to that.
Yeah. Well, that is it for the China Show. We've got Insight with Haslinda Amin. Stay with us. This is Bloomberg.